Bitcoin versus gold. Bitcoin and gold are two assets that have been compared as inflation hedges for years. While gold has been considered a relatively scarce asset, its value has stagnated in the face of explosive growth in the money supply. Bitcoin was uniquely created to meet consumers' dual needs for an inflation hedge and a superior medium of exchange to fiat currencies. Bitcoin's supply is finite, with only 21 million Bitcoin that will ever exist, protecting the asset from the inflationary pressures that fiat currencies with theoretically infinite supplies face. The supply of gold has grown about 1.2% on average per year since 2016. Gold mining and sale is nearly monopolized by several large multinational corporations, making gold supply vulnerable to internal corporate disputes, labor rights protests, and national or international conflicts. Most importantly, gold is inherently more susceptible to confiscation due to its physical nature. Gold is heavy and visible, making it more difficult to secure, transport, and hide from would-be expropriators. Bitcoin's authenticity and transaction history are easily verifiable by any individual through its blockchain. The authenticity of gold is notoriously difficult to audit, and the technology required to verify the metallic content of gold is expensive and does not scale. This equipment can only verify specific bars of gold rather than the total global supply of gold. Bitcoin is also more divisible and portable than gold. A single Bitcoin is divisible into 100 million satoshis, similar to how a pound can be broken down into 100 pennies, while gold is difficult to divide into small, spendable amounts. Gold is extremely difficult to move, with its weight and lack of divisibility significantly impacting its portability. Gold is most often stored in a personal safe or a safety deposit box at a bank, which comes with non-negligible counterparty risk and cost. Bitcoin can be stored in a software wallet or on a USB stick, and can be moved almost instantaneously using the Lightning Network, a layer on top of the blockchain, without delays or fees associated with third-party mediated transactions. Finally, Bitcoin is not physical, making it difficult to confiscate. Proving that an individual owns Bitcoin is also rather difficult, and Bitcoin can be easily self-custodied, making mass confiscation extremely inefficient. Gold is inherently more susceptible to confiscation as most gold is held with custodians such as banks, which are subject to regulations and legal action, making them easy to coerce. While gold has been a popular investment asset for a long time, Bitcoin has several advantages over gold as a hedge against inflation and as a medium of exchange.